Welcome to Earth Day. One of the crops we grow here is corn, right? U.S. top producer of corn around the globe. And how's that corn crop looking, at least in the market? Well, let's go. The front few months here is what we grew last year. So May, July, and September, that's last year's crop. That's what's in the bin. We call that old crop. And the May at 456.5 is up 2 3/4 cents. Now the December is the crop that's either in the ground or going in the ground, and we call that the new crop. 484 3/4, it's up 3, and that March contract is part of the new crop contracts for corn. Either way, corn moving higher now for the 4th straight session, in part due to export demand. USDA announced another 5.1 million bushels sold to unknown destinations on the heels of sales announcements yesterday as well. Now to soybeans, and beans have been in the red, down 3 3/4 cents on the November. Remember, I told you about the old crop for corn. Well, old crop for soybeans is May, July, August, and September. November, what we're putting in the ground now, 1162 3/4. It's down 3 3/4 cents. Wheat market, Chicago, July is the crop that's in the ground right now, 612. It's down almost a penny. Hard red, July, down a half penny, and it's at 655 1/4. Finally, over to the cotton market. The new crop, what we'll put in the ground, December, 80.15, down 164. Chris Robinson's with Robinson Ag Marketing. A lot of numbers there. And we talk old crop, we talk new crop, but what are you talking about right now, Chris?
Oh gosh, new crop soybeans. We retested the 2-year high last night at 474. Great opportunity, a mulligan. You know, when the war broke out, we hit 1174. 3 days later, we were at 1118. So we've come all the way back here. That's, 60 cents. That's a gift. I'm not calling a top, but boy, oh boy, you can see that little chart there. This is a good opportunity. And if you missed it the first time, don't miss it this time. Nobody sells the top, but it's a marketing opportunity, especially to be here, in the 3rd week of April. Really good action in all the grains. I mean, new crop corn is, a dime away from the high of the year. The high of the year was 98.5. We traded to 85, so 13 cents away. So you're getting a reasonable chance, especially where we started at the beginning of the year and we were at 440 corn and 1050 beans. I think it's a really good opportunity to do something here, especially for soybeans.
Hey, Chris, here over the last couple of years, we've actually made our highs here in the corn and bean markets back in February. We don't have to worry about that this year. I guess the big question, though, will we have more opportunities, and would we be missing out on an opportunity maybe to start pricing some in here?
No, I think that, it's a long marketing year and nobody can predict the future. I know that's my job is to help guys. Really what you don't want to do is be making cash sales when you don't want to or when you're forced to. So when you get a rally like this, you either reward it with a sale or you defend it with some sort of a hedge. And that's really what it comes down to. It's nobody's reinvented the wheel about risk management. If we knew exactly where the highs and the lows were going to be for the year, we wouldn't ever sell anything until we got the text message, this is the high. So I can tell you this, when we're at 2-year highs, it's something worth looking at in soybeans. You can see how fast these markets turn. We're going to talk about cattle later. Cattle was just at all-time highs last week. We just lost a big chunk of the rally. So you want to make sure that you are doing something to protect that revenue when it shows up.
Well, Chris, you teased it. We'll take a break, come back and talk cattle right around the corner. This is Market Day Report. And we talk cattle. Chris Robinson mentioned it, hitting all-time highs. And then what's happened? Well, we've slipped now 6 straight sessions here in the live cattle market. 246.30 on the April. We're down $1.12. June, most active 242.17. It's down $1.37. Feeders have been lower 5 straight sessions. If we finish here, we'll be 6 straight sessions in the red. The May at 357.32, down $1.22. But what we do know is you can slide only so long before you find some support and start building again. Perfect example. The hog market down 9 straight sessions and now fighting to finish higher for the 3rd straight. June still in the red, 102.85, down 35. July and August, however, are higher. Chris Robinson's with Robinson Ag Marketing. We start there with the cattle market, and again, just about the time you think we've made the high, or we're making a high. We'll pull back, and then you think, well, we're done now, and we go back up and test it again. Do we have another test in us?
The cattle market has become very, very technical and very, very influenced by high-frequency traders, a lot more so than it was, a decade ago. And you see that time and time again. The trend has been higher. The problem is we have these, $10, $12 slaps in the face, and then very, very technical. So look at June fat cattle. This correction today, this 241.5 level, that's about 40% of the last rally. So we'll test that for a while and see if it goes in. The financial community is very tied up with this stuff. They want to be long cattle because it's a good hedge against inflation. But then the other worry is that if gasoline stays at $4 a gallon, people are going to spend less money buying steaks. We've been worried about that for the past, really since COVID. And the American consumer has continued to step up and buy. It's kind of like that game of the straw that breaks the camel's back, which is going to be the last thing where the consumer says, I'm done. I'm not spending this for steak anymore. This Mother's Day weekend is like the biggest demand part of the year. We know that. So that comes in every year. You have seen some reasonable strength in the cash market. But what's going on in the futures market is very, very computer-oriented trading. And right now, May feeders, this 356 level, this is really, really big. It's halfway back. And all that means is, Tony, we had this big rally. Now we're halfway back. Now everybody's right and everybody's wrong. Everybody gets a chance to line up again and say, okay, are we going to rally or not? Keep your risk on paper. If you're a rancher, you're always long. You don't want to get in a situation where you get run over if you sell futures and then we explode higher.
Good points. Chris Robinson, Robinson Ag Marketing, by the way, he's on Commodity Wrap, Rural Radio 147, every Thursday.
All right, great stuff. Thank you, Tony.